Prakash. Thanks very much for speaking with us. Let's quickly turn our attention now to personal finance. Hemant Rustagi of Wiseinvest Advisors is waiting by. Hemant, good afternoon. Thanks much for joining in. Our first caller is through with us already. We have Jose, who's on the line with us from Visakhapatnam. Hi, Jose. Go ahead. What's your query?
Hello. Good afternoon.
Good afternoon. How can we help you?
Yeah, I want to invest rupees 50,000 in mutual fund.
All right.
I just don't want to take risk of getting my capital depreciated, and I'm looking out for some liquid or some debt funds.
What's the period that you want to make this investment for?
I'm just looking out for some good returns.
No, but for how long? 5 years, 10 years? Do you have anything in mind?
One year I can hold it. Yes, 1 or 2 years.
Oh, 1 year is really too short a time for you to not be taking a risk. I mean, and it's really a very short time to expect returns. But let me hand it over to Hemant, who's our expert. Hemant, what would you advise?
Well, you know, the key factor I think here is his time horizon. His time horizon is 1 year. So clearly he must ensure that he puts money in an investment option where his money is safe, because 1 year is not a time period where you can actually go around and take a risk. At the same time, I think it will be important for him to look at investment option which can give him higher return than what he can get from traditional options like bank deposit or saving bank account. At the same time, you know, the returns have to be tax efficient. So looking at these, you know, my recommendation would be that he should look at a hybrid fund where you know, there should be some exposure to equity, arbitrage and debt. As a combination, I think it works very well, because you know, while arbitrage and debt provide you the safety, the equity provides you the kicker, or in terms of you know, if the market turns volatile, you know, the return that you get from arbitrage and debt will safeguard you know, the losses that you may see in your portfolio. So you know, there are funds like Kotak Equity Saving Fund. There are a couple of funds in this category, but I think Kotak Equity Saving Fund has been doing very well. This fund invests around 20% in equity, and the rest is invested in arbitrage and debt in a manner that the total of arbitrage and equity is more than 65%, which you know, makes it tax efficient, which means that if he decides to withdraw his money after 1 year, any capital gain that he makes will be tax free. So my recommendation would be to go for a hybrid fund like Kotak Equity Saving.
Okay, Hemant, we'll leave it at that. Thanks for joining in. Markets dipped into the red on the back of small sell-off seen in Reliance Industries.